Welcome to the What's Your Deal podcast, where we discuss business acquisitions, investments, management, and exit strategies. I'm your host, Matt Euler. Let's dive in. Welcome to another episode of What's Your Deal. Today I'm joined with Carlos Salguero, and I'm going to read you his introduction. It's a fascinating story that Carlos has, and I will say that Carlos and I joined one of the offerings that he proposed in multifamily. So not only do I appreciate who he is, I've actually been able to see how he operates, which is why I asked him to join us today. So Carlos is the president and founder of CS3 Investments and is focused on acquiring the best multifamily real estate opportunities to create generational wealth for partners and investors. Carlos grew up in Ecuador, working unpaid for his family print shop before immigrating to the United States at 17, where grit and side hustles fueled his rise from an unpaid Hewlett-Packard intern to engineering manager. Determined to control his own future, he built Net Direct Distribution into a seven-figure business and later scaled and exited multiple other ventures, including real estate plays totaling over 1,900 multifamily doors. Today, Carlos leads CS3 Investments with a mission to help others create generational wealth through smart, mentor-driven investing, targeting a goal of $1 billion in multifamily assets and championing true financial freedom. And part of the reason I asked Carlos to join us is because so many of the people in our audience are entrepreneurs, aspiring entrepreneurs, and business owners that are looking for alternative ways to generate money. And the fact is that most small business owners have a substantial amount of their wealth tied up in their business. And so having gotten to know Carlos over approximately a year now, but also participating in one of his projects, I think he brings enormous value to our audience. So Carlos, thank you for joining us.
Matt, thanks so much for having me. Very excited to share with your audience a little bit of my journey. And of course, I know that you work a lot with entrepreneurs and people that are buying businesses, selling businesses. And in the commercial real estate world that I live, that's exactly the same. We're buying and selling properties that are pretty much a business, an enterprise. So super excited to talk to you today.
Yeah, thank you. It's funny. I think of your focus and mine as income producing assets, right? I mean, that's what they are. And they may look a little bit different, but they sure are. So can you share, I have quite a bit of your background in the introduction, but how did you become so proficient at identifying multifamily properties and structuring them in this way that is honestly second to none from what I've seen and participated in my career?
You know, I've been an entrepreneur for over 20 years, and I've always focused with my businesses. And just like any other business owner, you know, trying to create profit, trying to add value, trying to contain expenses and be efficient. And what I realized after starting 7 businesses, being successful at 4 of them, selling one for a lot of money, that the commercial real estate world is not very different than what we do in small business or medium businesses. Mm-hmm. We are after creating the most profit possible and building a team that can hopefully at some point take over for us, and allow us to have that financial freedom that we all aspire as entrepreneurs, right? That's why we start a business in the first place, make a lot of money and have a lot of time. And what I realized is that commercial real estate, multifamily, is very much a business. We're creating value by adding profit to these properties. And what I realized is that if I became really good at spotting missed opportunities by operators and current owners, I could quickly buy these assets that many times, as you know, are brand new, already have tenants, already create cash flow, and I could step in not only with profit in hand, but quickly implement strategies that will add to that profit line. In commercial real estate, we call it net operating income, but it's just basically EBITDA or profit for a small business. And if we do that, we can increase the value of these properties very, very fast.
Well, and I'm going to ask you later to share the example of the property that I invested in with you, because I think it's fascinating. But I want to start with people in the audience that may not be familiar with what does multifamily mean. When I first started out in multifamily, it was a duplex, right? And the picture in your backdrop, I believe, is one of the properties that you've put together and syndicated, and it doesn't look like it doesn't look like my first duplex.
Definitely not the first duplex, and definitely doesn't look like the first property that I own. Right. My first property, Matt, was a townhome, right?
Okay.
An attached townhome in a part of town that was probably not the greatest either. So, I've learned to do this, and I've owned all kinds of properties, townhomes, condos, duplexes, fourplexes, Airbnbs, you name it, in the journey of realizing, you know what, I really want to start owning some beautiful Class A trophy assets that not only I'm proud to own, but that I think that because we are sharing ownership with folks like you and other business owners and other people that have accumulated some capital, that we all feel very excited and proud to own for a long time and make money with.
Yeah, absolutely. And so if we can put this into perspective for our audience, I think, did you complete 3 projects last year? But maybe you can give us an idea of either the dollar value or the number of doors to just provide some perspective on the scale of what you're up to and able to facilitate.
For sure.
Yeah.
In the last 15 months, Matt, we have bought over $150 million of Class A commercial multifamily real estate. It's a total of just about 600 units total. Mm-hmm. So 600 apartment units. We bought 216 unit property, Class A, beautiful, in Elizabethtown, Kentucky. We bought the one behind me in St. Louis, Missouri, 251 units. And then we closed the year with an acquisition of 180 apartment units, again, in Elizabethtown, Kentucky. So all along, we've been buying these properties that we're not having to build from scratch. We're not having to develop. We don't have to wait 3 to 5 years for the project to start and finish, but we're basically taking over ownership of a cash flowing asset, property, or we can call it a business if you want, mm-hmm. that from day one creates cash flow. And of course, that gives opportunity for us to step in, put a great management team in place, implement a business plan, and start making money right away and start increasing profit for the business.
Well, and part of what I love about that, first of all, it's one thing for people to be able to buy properties, but the way I watched you buy the one that I participated in was very methodical, technical, an amazing team involved, your team, to guide the process. And the other piece about it that I just can't even tell you how much I appreciate is the communication. I never wondered what was going on. I never had to question where we were in the process. I mean, your team is truly extraordinary in guiding me in this situation through that process. So kudos to that, number one.
Thank you.
Yes, but number 2, I didn't have to quit my job to participate. It wasn't me trying to buy a fourplex or something, and then every weekend I'm spending working on it. And so you fulfilled a need for me, which is to place money in an investment that I can appreciate it, that I think has a greater anticipated return than I might expect in some other ways, without me needing to compromise my time or energy or anything else. I feel like my investment is in good hands. And I'm assuming most of the people who are participating with you share a similar desire. Is that true?
Yeah, look, what I find the most, Matt, is there's a lot of us that think about real estate as a great way to protect our capital and to grow it over time. This is the American dream in the end. Own your own home, build equity, and that would be part of your retirement. Mm. And for many business owners, after they achieve their home ownership, they're like, hey, can I go buy a rental? Can I buy a duplex? Can I buy something? And what they realize very quickly is that that dream of owning investment real estate turns into also a little bit of a nightmare of having to manage themselves the triple T's, right? Which are the tenants, toilets, and termites. And the calls in the middle of the night or on the weekends, I discovered that because, just like any other entrepreneur, I'm like, hey, I have a little bit of cash. Let's go buy a duplex. Let's go buy a single family home. Let's go buy this. Let's go buy that. And of course, because I'm a good delegator, I delegated to my wife the management of the properties. And that was the worst mistake that I ever did. Because not only I created more work for me, but also at some point my wife said, you know what? I'm done.
Mm-hmm.
I don't want to answer the phone calls. I don't want to go after the tenants move out and look at my properties, because she was somewhat attached to these, because a couple of these were our homes at some point.
Yes.
And, so a lot of folks, a lot of small business owners realize that. So when I discovered the commercial real estate, larger scale syndication model, where we can actually take over these properties, buy it as a collective, right? We all put our money together, buy these properties. I discovered something amazing, which we all do when we own a business, that we can put a manager in place at the property that is actually running the business every day of the week, emergencies included, tenants included, termites included, and toilets included. And we can, step back. And if you're a passive investor, you don't have to do any of the management. It's truly, absolutely passive. All you have to do is deposit your checks every quarter and read the emails that I send every month.
Right.
Like you've discovered.
Yeah, back to the communication. So that contributes in a couple of ways. One is, I'm sure that improved your marital harmony by not having your wife manage 600 doors. But secondly, 100%. A duplex, a fourplex, something like that. It's not big enough to support a management team and the levels of management that the property, like in the picture behind you, can support. And the other thing I appreciate about what you're doing is this isn't everybody else give you their money and then you put it together, and if it doesn't go well, it doesn't go well. I know you are deeply invested in these to a greater extent than anybody, I believe. And that means a lot, right? For me to put my money behind somebody who's right there next to me means a lot to me.
You know what was exciting for me when I understood this model, Matt, is that when I was a business owner of my own and I had a big team, 30, 40, 50 employees, I always thought, especially with my most loyal employees that have been with me for 10, 15 years in my other companies, I always thought, hey, can I make him part of the ownership somehow? And I never found a good, easy way to do that. But what I've discovered here is not only I can go and buy one of these with investors like yourself, friends and family, but also my team can be part of the ownership. So now they are part owners. They have equity in the business. They have equity that grows over time in the business. So that makes them a little bit more of that ownership mentality. And like you said, me being the largest investor in these deals, we're very careful about what properties we pick to acquire. We first put it through all kinds of tests, financial, physical inspections. Before we ever show it to any investor, like we have to be completely and absolutely sold out. Man, this is a great deal that is going to make us money, that is going to protect our capital, that is going to appreciate our capital, that is going to give us the tax benefits that we want. And then only then we open the doors to our family, our friends, and outside investors that want to come and join us on these projects.
Yeah, it's excellent. I'm a huge advocate as well in the businesses that I own, that people who contribute to the ultimate outcome share in the benefit. And not only does it feel good to me from a humanistic standpoint, but I also think it's hugely beneficial for them. We all get to win together. And so I now I understand that model and I get it totally from talking to so many people on your team. It makes perfect sense that that's part of how it's organized. So
yeah, it's exciting to me to be able to do that, because in the other businesses that I owned, like I had employees, but I always thought, like there's not much of an ownership mentality. Now that I have this different model where, these properties have enough room to share some of the ownership with our team and other folks, like I see my team investing in them without being asked. Like, hey, I have an extra, 50 grand or 70 grand or 100 grand. Can I also invest and come along for the ride? Because, you know, just like, is like when we own businesses, small businesses, like we're putting every penny we own
Yeah.
in those businesses in the first few years to hopefully one day be profitable and ideally sell in the future. So I'm seeing that ownership mindset go from just purely an employee that clocks in, clocks out to, hey, now I own this. Now I care for this.
Hmm.
I'm gonna treat people a little bit different. I'm gonna make sure that, for the folks that actually live in our properties, because some of our team lives in our properties, I'm gonna pick up the trash and I'm gonna smile to the tenants and
Yeah.
make sure they feel comfortable. It's completely different culture, and it builds community in the properties that we own.
Oh, I love it. I think as I reach a more advanced age, right, in life, there's a point where so much of my focus was my own survival. What do I need? And
Yeah.
then there becomes a point, and I think you demonstrate this so well. And again, having gotten to know you and connect with the heart that you bring to what you do, being able to figure out how to serve others and take them along with you on your success, I think it's amazing. So
Thank you, Matt. Appreciate
yeah,
that.
yeah, absolutely. So I want to talk about some of the things that you've learned, some of the hard lessons you've learned. And then I'd also like to dive into a deal, and we can dive into the deal I invested in, the McKenzie project, if that's beneficial, or anyone that you'd like. But maybe you can give us a short trip down that road. How you identified the project, how you did some due diligence, you tied it up, and really part of what I love about the McKenzie deal is the areas of opportunity for increased income that you identified that the current
Yes.
owner, who was the developer, was not capitalizing on, honestly boggles my mind. And so,
Yeah.
yeah. So what are some of the biggest lessons you've learned? And then let's talk about that actual deal, if you don't mind.
Yeah, look, I think some of the tough lessons that we all learn, and I learned a lot from, my role model growing up was my dad. He was a small business owner in South America, had a small print shop, and like you read in my introduction, I worked for free for him for many, many years. And that was just part of being the family, right?
Mm-hmm.
Like I never really asked him, hey, are you going to pay me or anything like that? And I'm so glad I did that, Matt, because I was in it for the contribution back to him and my mom that, took care of us and educated us and gave us opportunity. But also, I learned that when I'm working on a project or an industry or something new, I'm not so much after the dollars and cents. I'm more so about the expertise that I can acquire by doing this right alongside somebody that already has that experience, knowledge, and ideally success.
Mm-hmm.
And, I did this with my dad, and then I did it again in college, and I did it again at Hewlett Packard because I found myself in situations where like people wouldn't hire me if I didn't have experience. And I said, hey, like I'll work anyways. You don't have to pay me.
Wow.
And every time I'd said that along the way, like people like get a little freaked out, to be honest, right? Like, what is this kid after, right? Because like in this day and age, it's like, okay, how much are you gonna pay me per hour? Do I get a 30-minute lunch or a 45-minute lunch?
Uh-huh.
Am I gonna get paid for going to the bathroom or not? Am I gonna get benefits? You know what I mean? Like, there's all these questions that we all always like see is like, are you here to contribute or are you here to like, like get everything that you can while you're here,
Yeah.
right?
Yeah.
So that was a mindset that I think I'm so grateful of my childhood and upbringing that I was never in a hurry to make a ton of money with hours trade for work,
Mm-hmm.
right? So I had a little more of a longer time frame, if you would, of hey, I know what I'm here for. My long-term vision is I want to do this. So I think some of the hardest things that I encountered is the skepticism of people of me saying, hey, look, I'll work probably harder than people that you're paying. And I'll work weekends if you want me to. I'll work evenings if you want me to. If you need me for other projects, I'm your man, right? So sometimes people were a little weirded out about that, right? So,
Yeah.
but after they got to know me, they're like, hey, hey, Carlos can do this, Carlos can do that. So I quickly like got promotions and raises and stuff like that when I was working for somebody else.
Mm-hmm.
And when I started my own businesses, I naturally did the same. So I was never in a hurry to shoot, man, I need to make $1 million this year. I need to make this or that. It was all about, hey, I'm going to pay my basic bills and I'm going to reinvest to keep the business going and eventually generate enough profit that this is going to take care of us. So I think for me, the hardest thing was, just always living below my means,
Uh-huh.
which has been incredibly powerful throughout my life because it has allowed me to stack enough capital for these investments and also probably leading other people to believe in the long-term vision,
Uh-huh.
right? Because as you know, many times we hire folks and we tell them, hey, look, I'm going to do this and I'm going to do that. And a small percentage actually believes you, right? The majority are like, shoot, this guy's crazy. I'm going to work here. But then eventually they see that you're like too much and they're like, no, I'm going to go somewhere else where I don't have to be here on the weekends. Right.
Uh-huh.
So like any business owners, one of the hardest things for me is, finding great people to work with that are along with me for the whole ride and that want to be in the bus. And those that have been with me for a long time have realized, you know what? As long as we're here, we're going to all get wealthy together
Mm-hmm.
if we stick with this. But of course, like in any business, there's great times and there's not so great times. So being able to survive through those droughts of maybe the economy changing or losing a large customer or maybe technology becoming obsolete and changing. So, that has been probably one of the things that have really helped me thrive is that I never gave up. I
Mm.
pivoted, but I never gave up. And I've seen the changes in every industry that I've been. I made a lot of money in e-commerce, made a lot of money in logistics, made a lot of money in nutrition. Now we're making a lot of money in real estate. And all of them have their set of challenges that is just basically, I always say this, and this is my motto with everybody is there are no problems, only opportunities.
Yep, I appreciate that. When you describe working for free and that approach to life and attitude, part of what I love about that, I use the term building equity in relationships.
Yes.
And that's what I heard you say is you built equity in those relationships and it wasn't a sprint for you, it was a marathon, right?
Mm-hmm.
You weren't worried about what's in it for me right now. And it's as we're talking, it's not shocking to me at all how you've been able to accumulate such an empire with that approach and that attitude. So let's dive into the McKenzie deal. Very unique building. Yeah. So maybe you can describe the building and then the areas of opportunity that you saw are so unique. Matter of fact, I've never seen anything like it.
One of the strategies that we use, and you could use this to buy anything, is get a hold of whoever controls the deals.
Mm-hmm.
And in order for us to buy this, trophy assets that we own in the portfolio, we have to talk to a lot of brokers, a lot of lenders, a lot of property managers. So part of our activity in the business is building these relationships, right? Like having them think of us as potential buyers and be top of mind. And just like in any business, if they don't know you, they won't flow you business.
Mm-hmm.
So in the beginning, it was really hard because you don't have a proven track record, especially when you're just beginning. Like you have to work extra hard for them to actually show you the pocket opportunities and the off-market deals and the stuff that falls out of contract and things like that. So, now that we have some track record and they've seen us close multiple deals back to back, now we're starting to get these. So, McKenzie came with one of those relationships where the broker knew us. They had already been talking to us and probably for the last year or so. And when this property came available after it fell out of contract with another buyer, they said, hey, are you guys interested in looking at it? And from the moment that we saw the property, it's very hard not to fall in love with it.
Uh-huh.
Right. And I'm always telling my team and everybody that invests is like, don't fall in love with the deal. Right.
Right.
Like, no matter how beautiful it looks, don't fall in love with the deal. until you fall in love with the fundamentals, the numbers, and make sure that it works. And I have to tell you that it was very hard for us to not fall in love with this deal just on the physical side of things.
Yeah.
Because as you know, this is a beautiful 251 unit property, just 3 years old, that has incredible amenities,
Hmm.
right? The pool on the rooftop is a resort style. You would see something like this at the Four Seasons or the Ritz or one of those high-end luxury resorts in Mexico. It has a sky lounge with a massive bar. It has a 4,000 square feet gym. It has a basketball court on the roof of the property,
Hmm.
a soccer court. It has, the lobby looks like your five-star hotel. You walk in, so obviously we're like, man, this place is amazing,
Uh-huh.
and you always expect to pay like top dollar for those places, right? But one of the good opportunities here is that we found that the sellers at the time had already had a failed contract, so we were catching the rebound, and we were put in a very positive light by the broker as to people that could qualify to buy this.
Mm.
And at some point, the broker told me, "Hey, Carlos, they give it to somebody else." So I was already thinking, you know what? Maybe it comes back, maybe it doesn't come back. But I didn't give up. And I kept telling the broker, "Hey, look, if those guys fall out of contract, let me know. If those guys fall out of contract, let me know." To the point, Matt, that he was like, "Carlos, I know. Okay. Stop telling me the same thing over and over." And sure enough, I was in Cancun with my family on vacation, and I get the phone call from this guy, and I'm like, why is he calling? And he says, "Hey, Carlos, the contract fell through. The second contract fell through,
Wow.
and the seller wants to talk to you directly." And every time that I can talk direct to seller,
Hmm.
as you know,
Yeah.
things get better
Hmm.
because now you don't have that middleman that sometimes the communication gets broken up and jumbled up and, the telephone game. And now you're like, "Hey, can we do this together?" So that's what really made this deal happen is I was able to talk to seller direct. We started negotiating. It took a minute. It took probably 2 months of back and forths and terms and price and timing and everything else. As you know,
Yeah.
these are not your single family home contracts that close in 20, 30 days.
Uh-huh.
These are, 90 days, sometimes up to 6+ months of contract and due diligence and everything else. So, we went through that process, started the project with agreeing on the price and agreeing on terms. And I was very honest with the seller and said, "Look, if you give us this opportunity, we're going to close.
Uh-huh.
We're going to help you close." And as I started digging deeper into the deal, I started finding those opportunities that you told me that I found, which
Yeah.
are, just basic things. When you have an asset like this that has the amenities and everything else, you have a community of over 400 people that live at the place that is a captive audience in my mind.
Hmm.
So we started thinking about, oh, do we have any pet services, right? We have about half of the tenants have pets. Is there any way that we can monetize with the pets?
Hmm.
Can we establish a grooming service, a bathing for dog service, and add value like that way? Do we have an opportunity to add maybe some technology options, right? A lot of people want technology like cameras on their doors and ring doorbells and things like that. Can we add that and add revenue that way with tenants? Can we maximize the grab and go market that is basically a little mini store in the lobby that had been, not really maximized, but can we maximize that? There was empty space in the lobby that was not even rented, and
Hmm.
it's almost like a coffee shop type of space. Can we go offer that to somebody that wants to sell coffee and pastries and juice or whatever? Can we rent that for a couple grand a month? And then we started finding all these opportunities that, were probably at some point maybe didn't exist in the seller's mind, because another thing that I've realized in this industry is that there's operators like me and there's developers,
Hmm.
right? The developers of commercial real estate look at these projects, they buy the land, 3, 4, 5 years out. And now they have their project set out and they have to, deal with the city, with the government, with labor, with materials, things like that. And as you know, just like in any startup, things rarely go to plan, right? There's cost overages, the city gets in the way, you have problems with your contractors, things of that nature. So what they thought 4 years ago or 5 years ago when they started is very different by the time that they finish it and they start leasing up. And in this case, it was exactly that. So they're in somewhat of a hurry to now make their money back.
Interesting.
Because for the last 4 or 5 years, if you think about it, developers don't create any profit until the place is leased. So for at least 4.5 years of that whole journey, all they're doing is writing checks, writing checks, writing checks, writing checks. And that gets old.
It does.
Right? And the economy has not been kind to developers in the last 2 years because of high interest rates.
Right.
And as you know, when the cost of money goes up, the value of businesses tends to compress because there's a direct correlation between what you can finance to the price of what you're getting. So that has been also our advantage. So I knew these guys had a certain amount of hurry.
Yeah.
And of course, by the time that they were ready to sell, there's just so much meat on the bone that we could go capitalize on.
Well, it's a great description, and I've got a couple of questions for you as we drill into it. But one of the things that attracted me to the property, two things. One is it is truly a resort that's got apartments in it, right? I mean, if I was moving to St. Louis, that's where I'd want to be living. And I know from an investment standpoint that may or may not make sense, but it certainly helped push me over the edge to wanting to participate because it is a trophy property. And secondly, you've referred to it a couple times like a business and as a business. And part of what I appreciate about buying businesses is that there's a model that I can assess. And it either works or it doesn't. Startups come with all of the unknowns that you described the developer had. But I know because I went through the financials that you provided, what you bought was absolutely an income producing asset, a business where you could look at the math. And as long as you didn't break it, you knew you were okay. And all these areas that you can improve on. And one more I want to talk about is then it just becomes upside. And it was amazing to me that the current owner didn't appreciate. I think even the convenience store income wasn't included in the financials. I mean, the parking garage was enormous. And one of the opportunities was potentially to lease space to nearby rental car agencies that needed overflow parking lot. I mean, that's just so nice to strap on to an apartment complex, multifamily project. So did you know that why did the two deals fall out before you? Because that could become scary for a buyer. What happened with those two deals?
You know, brokers are vague when things like that happen because, they don't want to compromise price. But I truly think that was a function of the lending that these other two buyers were working with did not feel or retraded on them like at the 11th hour. And I've learned my lesson there too. One of the key things about buying commercial multifamily rush properties is you have to have a lender that tells you, Carlos, this is the loan that we can give you with the upfront numbers. And there's very little variability between the original quote that they give you to when you get to the closing table and they're writing you a check. And I think for some groups that maybe are not as experienced, or maybe they're experienced, but what the market has been really tough in the last 2 years is because of the volatility of interest rates and also politics and all that stuff. A lot of lenders kind of pulled back on their terms. They increased the loan. They increased or decreased the loan to value. Right? They didn't want to lend as much on certain assets. They were taking a little bit of a precautionary policies on interest rate and everything else. So I know that the two buyers before me were not using agency Fannie Mae or Freddie Mac loans. And the advantage of a Freddie Mae or a Freddie Mac or a Fannie Mae loan is that they're government,
Mm.
and they are much more stable than Wells Fargo or a Chase or one of those big groups that give you a term sheet,
Uh-huh.
and that is non-binding, by the way. And by the time that they're on the closing table, they're like, "Hey, Carlos, I have some good news and I have some bad news." Have you ever gotten those
Oh,
calls with
absolutely.
lenders?
Absolutely.
And I'm like, "Okay, what's the bad news?"
Uh-huh.
It's like we can't give you that much money. It's like $3 million less.
Yeah.
Okay, what's the good news? Oh, we're gonna fix the rate a couple percentage points.
You're
And
right.
I'm like, okay. So I've dealt with that
Yeah.
over my journey. So now, I'm very cautious that when I go into a deal, I'm super conservative on the debt. I know exactly my number. I kind of even pad my underwriting to make sure that, hey, in case that the lender pulls back a little bit, I'm covered,
Uh-huh.
right? And so I would tell you that's probably what happened with
Yeah.
those two other buyers. And also, there was a lot of news about the group that developed this that probably created some nervousness on those groups as well. But I can tell you now we've operated this asset for 6 months.
Uh-huh.
We've paid $600,000 of cash flow distributions. You already got two distribution checks
Thank you.
on the deal, and and we're excited because
Yeah.
we underwrote about a 4% rent bump year over year,
Uh-huh.
and we're achieving leases with 9% bumps on them.
Yeah.
So I'm not saying anything, but it's also very much easier to sell a beautiful property that has the best amenities in town. And if you have a good team that understands how to, give a great experience to a prospect and close a deal on the spot, you can do things that maybe a property that is not as good looking and that doesn't have all the bells and whistles can do, right? So that's another thing that I saw that I can't put that on a pro forma, right? I
Uh-huh.
can't. I can't tell you on a pro forma, look, I think this pool is going to help us increase the rents.
Right.
But once you know the business and you understand and your boots on the ground and you can train your sales team and your leasing team, then, it does make sense because some people walk through and say, basketball court,
Right.
never seen a basketball court in an apartment complex.
Yeah.
And we're like, okay, yeah, here you go. Here's the lease. Sign here.
Right.
That can be yours. In fact, shoot a 3-pointer and I'll waive your application fee. Make
That's great.
it.
Well, there's so much in there, and some of the gems that you point out, and then I've got one more question for you before we wrap up. But some of the gems that you point out is lenders retrading is horrible. And I've experienced it just like you have. And it's the last conversation I ever have with that lender because I just simply will not tolerate it because I am so compromised. And I know in your situation, I'm sure you were as well. And anyway, enough on that. But I would venture to guess that that's probably exactly what happened with the two previous buyers, because when I looked at your package, and I've underwritten lots and lots of deals through my private money lending company and through business acquisitions and all kinds of things. As I kept thinking, geez, I wonder what, and I'd write down a question and then you would answer the question in the package. And what I have found and what I believe to be true with your story, even though I'm making it up, is that the lender who received your package compared to another package, you made it easy for them. Right. Yeah. And if an underwriter's sitting in a room with no windows and they've never been to St. Louis, they don't know how to spell it, any of that. And you're making their job easy because you've answered all the questions and they don't need to go and dig into this and go into that and send you an email for this. It's a whole lot easier for them to stamp it approved. And I just have to believe, having studied that package and how thorough it was, that that's probably what happened. You made your lender's job easier, and that's part of the reason they proposed. And this isn't, I think it's safe to share that this isn't a signature loan. I mean, we're talking tens of millions of dollars to take down a project like this. And it's a huge accomplishment.
A lot. It's a $72 million acquisition. So, the loan alone is $48 million.
Yeah. Yeah. So
Right.
you don't walk into the branch and just say, can I speak with your loan officer for that? Right. It's that's a different process.
No,
So
I'll say the
yeah.
underwriting and the due diligence that the lender does is, pretty intense.
Hmm.
Like they want to know everything about you, number one, and they want to know everything about the project.
As they should. Yep. And
Yes.
again, you made it easy for them. Um, so it's an honor to be part of that project. And I appreciate you walking us through this deal. One of the things that I ask all of my guests to share, because it's important to me, it helps me remember gratitude. And having received some of your communication as one of your partners in this project, I appreciate that. I believe you focus on the same thing is how did you get where you are? Somebody gave you a hand up, believed in you when you didn't believe in yourself. Can you share a story about how you got to be so successful in this endeavor and where you are in life?
Yes, first of all, I have to thank God because He guides me daily. But
Amen.
also, my parents are probably my number one supporters, right?
Mm.
Both small business owners. I always had big dreams, and I never heard from either one of them, that's too big, Carlos. You can't do
Wow.
that, Carlos. Right? So I remember my dad, as a small printing shop owner, would come to the US to the trade shows of, printing machines and things like that. And a couple times he brought me to New York, Chicago, and we would walk downtown after the conference, and I would look at this big, massive skyscrapers and apartment complexes. And I remember a couple times that I asked my dad, "Hey, Dad, who owns these big buildings?"
Wow.
And he would say, "I don't know, son, maybe somebody very wealthy or maybe a bank or something." And I'm like, "Dad, do you think I can own one of these one day?" And it still gives me chills, man,
I
because
get it.
he could have said, "Too big, Carlos, land the plane, you're flying too high, whatever." But he looked back at me both times that I remember I asked him, he said, "Carlos, I think you can do this."
Wow.
That was it.
Yeah.
So he didn't cut my wings. He didn't say no. He just left the door open for me to one day walk through it.
Yeah.
And so that was probably the biggest thing to allow me to progressively think bigger and bigger and bigger, right? At some point, Matt, buying a $1 million property was scary,
Uh-huh.
right? Once we got that done, it's like, okay, I didn't die. We're alive. let's go for the $10 million. And then I ended up getting a $18 million under contract without having the money, without having the cash. So there's so many people, too many to mention, but I have to give thanks to not only my parents and God, but every person that said yes along the way of me being someone that could buy one of these, right?
Uh-huh.
Because at the end of the day, the sellers have a choice, as you know,
Yeah.
and they could say, Carlos, maybe he's not real, right? Maybe he can raise the money. Maybe he can get the loan because it's not like a small purchase, right? You buy a home that is $3 million. They ask you for a proof of funds. You already have it in the bank. Here you go. You're pre-approved. No, man, there's a lot of trust when it
Yeah.
goes out on these big deals because the capital that we need to close the deals does not exist when we sign the contract,
Uh-huh.
right?
Yeah.
Just like buying a business.
Uh-huh.
It's like, hey, I'm going to go raise this money.
Yeah.
So there's a level of trust that has to exist between the broker and the seller and me. And so I'm super thankful to my sellers and my lenders that trusted me enough that I could perform so that I could build what now is the foundation for that 1 billion plus dollar portfolio that we're after.
That's it is a great story and powerful. It does bring chills to have the parental support like that is just so beautiful. And it's also great that you fulfilled some of that and you're on that journey. A lot of people just would, oh, maybe someday or whatever, but you're doing it. And again, I'll just acknowledge you one more time because being in communication with you, I stop for a second every time I get an email from you because I just know how grateful you are to be where you are. And it's, again,
Yes.
tons of hard work on your end. And you appreciate everybody who's been part of it. And I just think that's extraordinary. So thank you for joining us today and for sharing with us your story and how you've made it to where you are and what you're up to. I think it's extraordinary.
Thank you, Matt. Yeah, I would say, look, be always grateful. Never forget where you came from, and never forget to thank those that helped you get there. Because to reach any high level of success, you can't do it alone. There's just so many people that trusted you, believed in you, worked for you, and gave you a hand. Even the people that didn't believe in you helped you get there, right?
Yeah.
Because sometimes if you're like me, like, oh, you said no, I can't do it, I'm going to go do it to prove you wrong. So.
Right. Yes, absolutely. Well, thank you again. Well, I hope you've enjoyed this episode. You know, it's dear to my heart that I get an opportunity to spend time with people like Carlo and look behind the curtain at what worked for them, and whether it's from humble beginnings or from extraordinary beginnings. It's every story is unique, and it's such an honor for me to be able to share them with you in this way. And I hope you enjoy them as much as I do. And we will see you on the next episode. And that's a wrap on today's episode. We hope you enjoyed the conversation and got some valuable insights into the world of buying and selling businesses. Want to be a guest on our show? If you have a deal that you'd like to discuss with us or a business story to share, we'd love to hear from you. Shoot us an email using the contact information below in the episode notes, and let's make this happen. Never miss an episode. Make sure you subscribe on Apple Podcasts, Spotify, or wherever you listen. And if you found today's episode helpful, please leave us a review. It helps more people like you find the show.